Milton C. Grimes, a veteran attorney from Los Angeles, has pleaded guilty to evading more than $4 million in federal taxes over 21 years. His guilty plea specifically addresses one count of tax evasion related to his 2014 tax obligations, admitting that he failed to pay $1,690,922 to the IRS. According to court documents, Grimes did not pay his federal income taxes for multiple years between 2002 and 2023, accumulating a total debt of $4,071,215. Additionally, he did not file a tax return for the year 2013. Starting in September 2011, the IRS attempted to recover Grimes' unpaid taxes by issuing more than 30 levies on his personal bank accounts. However, between May 2014 and April 2020, he deliberately evaded payment by avoiding deposits into those levied accounts. Instead, Grimes strategically hid his earnings by purchasing approximately 238 cashier's checks, totaling $16 million. He also withdrew cash from his client trust account, interest on lawyers' trust accounts, IOLTA, and his law firm's bank account to prevent the IRS from accessing the funds. For instance, on December 5, 2018, Grimes deposited $1,001,961 into his IOLTA account and immediately purchased 9 cashier's checks for the same amount to shield the money from IRS collection. Types of fraud committed: tax evasion, willfully avoiding the payment of taxes over an extended period. Failure to file tax returns, not filing a tax return for the year 2013. Concealment of assets, using cashier's checks and cash withdrawals to hide income from the IRS. Obstructing IRS collection efforts. Intentionally avoiding depositing income into accounts subject to IRS levies. Misuse of trust accounts. Using client trust accounts and IOLTA funds to bypass tax obligations. Ways to detect this type of fraud: unusual banking activity monitoring, identifying excessive use of cashier's checks and frequent cash withdrawals. IRS tax return audits, flagging individuals with high earnings but no tax payments over multiple years. Scrutinizing trust account transactions, ensuring attorneys do not misuse client trust or IOLTA accounts for personal financial gain. Tracking IRS levies and non-compliance, monitoring repeated tax levies and non-payment patterns, comparing reported income versus lifestyle, investigating discrepancies between declared earnings and visible wealth, such as luxury purchases.